Hey there, it's Jared Hamilton with the Hamilton Group at Cherry Creek Mortgage, and welcome to another edition of Java with Jared. Hope you guys are doing fantastic. You know, if it sounds like I'm in a tunnel, it's not the microphone. I've got a cold, so I apologize. I'm a little stuffy here. So anyway, hope you guys are doing fantastic. Wanted to let you know what's going on with interest rates, and also expand on what I talked about last week, which was rising home prices, show you what rising interest rates will also do to your client's bottom line. And I want to communicate this fact that, you need to get out there and show your clients how you can maybe save them about $73,000 on the purchase of their next home. And I'll show you how that works. So what's going on with economic data and interest rates first? So we saw, again, interest rates decline. Well, actually, the price decline. So we're seeing interest rates get worse. So interest rates have gotten worse, again, this week as opposed to where we were last week, and we're in a trend. So it looks like interest rates are really under pressure here. And reason is that we're seeing some signs of positive economic data. I mean, and the reality is interest rates are super, super low. So even with the Fed's support here on buying mortgage-backed securities, we are seeing interest rates continuing to deteriorate, and we are in a trend, and we're going to need to see some major things shift in order for that to happen, like the stock market really correct. But the stock market's been rallying, and that's caused interest rates to be under pressure. In terms of economic data, we saw existing home sales come in, and that showed at 4.94 million homes being sold each year. That's slightly lower than what it was the previous month at 4.99, and off the expectation of about 5.1 million. So existing home sales were a little bit weaker than expected, but still, generally speaking, pretty darn strong from where they were before. Weekly jobless claims, those came out and showed the lowest level in about 3 years. We saw jobless claims decline to 330,000 week over week. So that caused the stock market to rally a little bit. Also, with good earnings numbers from Google and IBM, caused, again, the stock market to rally, caused money to go from bonds into stocks, and that caused, again, interest rates to get a little bit worse. Another piece of important economic data is the Federal Housing and Finance Authority, FHFA. They released the existing home sales and showed, well, actually the price increase, and that showed that November compared to October increased 0.6%, and the year-over-year number showed an increase of 5.6% price appreciation. So that's good, again, showing that this economy, housing is actually doing pretty well. Still off its lows of 2007 by 15%, but it is showing that the housing market, as we know, are showing signs of increasing. Now, on to how you can save your clients $73,000 on the purchase of their next home. Last week, I showed and shared with you predictions about how the housing data is showing that prices should increase, and experts are predicting that. And I want to couple that with interest rates. And we've talked about this before, but again, I think that we need to really ride this horse. I want you to get out there and tell your clients about this. But so this is now about interest rates. So moving forward, this graph that you'll see shows that they're predicting interest rates to rise right now off its current level of 3.5% into the fourth quarter. Fannie Mae and Freddie Mac predict maybe as high as 4.4% into the fourth quarter of this year. And then if we couple that with home price appreciation, I showed this graph that we've got different experts predicting appreciation is going to be increasing. So if we take the fact that today on a $400,000 price of a home here, if you put 20% down, that makes your loan about $320,000, and interest rates at 3.5%. Payments are about $1,436. If your client waits, and if prices appreciate by, I took the lowest level, the 2.44, that means that same house is going to be almost $10,000 higher, again, for the same house. And then if interest rates go up to the 4.4%, that means that in addition to the higher priced house, which means their loan amount goes up, putting 20% down, and their rate goes up, that same exact house is now going to give them a payment that is about $200 higher than what they would have gotten if they bought today. So just by potentially waiting, and if things happen, and look at the trends, we're seeing this happen right now, they're going to save, by buying now as opposed to later, $73,000 or over $73,000 on their next home. So that's where I got this title, and I think you need to communicate this to your clients. And I also just included a graph just so you could show how rising interest rates increase the overall cost of that mortgage over the life of a 30-year fixed-rate mortgage. So use these graphs. Get this information out. If there's anything that I can do to help you do that, if you wanted to create or have me create a video that you could send to your clients, just let me know, because I think this is important. If your clients are thinking about buying a house in the next year, and if they're willing to look at it today versus later on, I think they're going to be better off, and you'll be able to save them some money. So get that out to your clients. Hopefully this information was good. If you have any questions for me, please give me a call as always. Have a wonderful weekend and a great next week, and I'll talk to you later. Thanks for joining me with Java with Jared.